Good day and welcome to the Q3 FY25 N Gadgil Jewellers Limited conference call hosted by Motilal Oswal. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. I now hand the conference over to Mr. Naveen Trivedi from Motilal Oswal. Thank you and over to you.
Yeah, thank you so much. Good afternoon, everyone. On behalf of Motilal Oswal, I am Naveen Trivedi. Would like to welcome you all to the N Gadgil Jewellers FY25 earnings conference call. From the management today, we have Mr. Saurabh Gadgil, Chairman and Managing Director, Mr. Kiran Firodia, Executive Director and CFO. I would now hand over the call to the management for the opening remarks. Over to you, Saurabh.
Thank you, Naveen. Good evening, everyone, and thank you for joining us today for the N Gadgil Jewellers Q3 FY25 earnings call. I hope you all had the opportunity to go through our financial results and earnings presentations, which are already uploaded on the stock exchanges and the company's website. So this quarter has been really remarkable for us as we continue to build on our strong market presence and customer trust. We were delighted to share that October 2024 was our best ever month in which revenues surpassed 1,050 crores, setting a new benchmark for the company. For the entire Q3 FY25, our total revenue stood at 2,435 crores, registering a 23.5% growth year on year compared to 1,972 crores in Q3 FY24. This performance was largely driven by a strong demand during the festive and wedding season, an uptick in the consumer sentiment, and our ongoing efforts to enhance the product portfolio. At the store level, our revenues per store stood at 3.25 crores, demonstrating strong operational efficiency. Our SSG, the same store sales growth, continues to be strong at 26%. Our retail segment, our business is primarily divided into three segments: retail, e-com, and franchisee, of which the retail segment is around 77% and leads to delivering 42% YOY revenue growth, an EBITDA margin of 6.42% and a PAT margin of 4.23%. Beyond retail, we witnessed exceptional growth in our e-com and franchisee segments too. Our e-com revenue grows by almost 100% to 70 crores, and the franchisee revenue rose by 87% to 226 crores in Q3 FY25. This robust growth across all the segments reinforces our strategic direction and position us well sustained in the upcoming quarters. Adding to that, our customer engagement remains very strong, with our transaction volume rising by 21% and the average transaction value ATV increasing by 22% to 86,000 rupees per transaction. Moreover, we recorded a 36% increase in footfalls and supported by a strong conversion ratio of 93%. This has helped us to really focus on the consumer demand and purchasing at all our stores in a most efficient way. The festive season played a crucial role in Q3, with Navratri sales increasing by 18% and Diwali sales increasing by 53%. We capitalized on this momentum by successfully expanding our footprint with the launch of 9 showrooms in 9 consecutive days during Navratri, bringing our total store count to 48. I think this is the first time that some jewelry brand has been able to demonstrate 9 days of Navratri with 9 store launches. This marks a 45% year-on-year growth, and we are on record to reach 53 stores by Q4 FY25. The expansion reflects our commitment to growth and our ability to meet festive consumer demand effectively. Additionally, an important point we observed is a 39% year-over-year increase in our studded ratio, which now stands at 7.4%, highlighting our evolving consumer preference towards more premium jewelry offerings. Our engagement with the entertainment industry also continues to be strong, with our brand presence in the promotion of the movie Pani at our store this quarter. Despite record high prices of almost 80,000 compared to 72,000 last year, we witnessed a 5% increase in demand. The strong demand during the wedding season has been particularly beneficial, contributing significantly to our growth. We are also observing a shift in the consumer preferences, with a growing inclination towards lightweight, rose gold, white gold, primarily among younger customers. We also anticipate that by 2029, the demand for 18-karat gold will increase significantly, bringing further opportunities for growth in the industry. A key highlight of this quarter also has been our enhanced hedging strategy, where the proportion of hedged gold through GML increased from 12% last quarter to over 45% this quarter, which showcases our effective risk management strategy and the ability to navigate further. We are confident that our growth strategy, customer-centric approach, and expanding store footprints will continue to drive value for all our stakeholders. With this, now I invite our CFO, Mr. Kiran Fedodia, to provide deeper insight into financial performances. Thank you. Over to Kiran.
Thank you and good evening, everyone. Let me take you through the financial of the company. For the quarter ended December 2024, we reported consolidated revenue of INR 24,357 million, reflecting 23. Hello? Hello?
Yes, sir. Yes, we can hear you.
So reflecting 3.5% year-on-year growth, we achieved the EBITDA of INR 129 crore, making 37.2 growth year-on-year with EBITDA margin of 5.3, up basis points year-on-year. So the consolidated PAT come to INR 8 crore, representing almost 49.5, that is 50% year-on-year growth with PAT margin of 3.5%, a 60 basis point increase year-on-year. We have achieved robust performance across all key business segments. Our retail segment posted a strong growth of 42%, contributing 187 crore to overall revenue. 1878 crore revenue to the overall top line. The e-commerce segment demonstrated exceptional growth for almost 100%, gearing to 70 crore. Lastly, the franchisee segment recorded growth of 87%, which is contributing 27 crore on our top line. If I have some update about 9 months ended 31st December 2020, consolidated revenue stood to 61,052 million, a 32.7% year-on-year increase. Reported an EBITDA of INR 2,690 million, reflecting almost 40% year-on-year, with EBITDA margin of 4.3%, and PAT for 9 months stood at INR 156 crore, making 53.7 strong growth year-on-year. This reflects our operational execution and customer-centric approach and strategic investment across channels. We are confident in our ability to sustain this momentum as we continue to create the value for our stakeholders. Lastly, the most important is the hedging, that metal load which we avail, and for meeting our day-to-day gold requirement. This based on daily sales criteria. In aggregate, the hedging is currently, as on December, is 83.6%. And as on today, that is, January, we are fully hedged with respect to my total business gold. So over to you guys.
So now we'll be open to questions, further clarifications from investors.
Sure, sir. Would you like to begin with the question and answer session?
Sure.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question on the line of Tushar from Big Shot Investments. Please go ahead.
Hello. Yeah. Am I audible?
Yeah, sure.
Yeah. Good evening, sir. My first question is, if I see your last year quarterly result, company achieved lower profitability in Q1 and Q2, and whereas Q3 and Q4 profitability was at the same level. So, do we expect this trend to continue this year, or should Q4 be lower than Q3 this year?
Hi, good evening. So, with respect to the profitability for last Q3 quarter ended, we are hopeful that we will continue the momentum on the same way. Main reason is that now we are focusing more on hedging part, so there should not be any impact whether gold prices will be go up or go down. there will be neutral effect. So whatever may be the business we are expecting, that is definitely going to generate the profit in the same margin.
Okay. Next question is the ROC on the new store comparable to some of our old stores?
Sorry?
ROC on the new store is comparable to some of our old stores?
Yeah, so ROC of the new store, as we mentioned or as we have given some insight at the time of IPO, that time also we have demonstrated that whatever new store we are open, it is typically taking 15 to 18 months to reach at break even. But if you ask me the current data of 9 days, 9 stores which we have opened, as on date they are operationally self-sufficient to cater all the store expenses. So if the momentum continue, then we hopefully able to break even less than a year, and then they will definitely start adding to the ROC as well as bottom line.
Okay, and one last question. We are planning to expand to MP, Chhattisgarh and Jharkhand from next year. Our brand will be relatively unknown in these markets compared to Maharashtra. So how do we expect to maintain our performance in this market, and what is our strategy?
Yeah, it's a good question. So this is something which we have been working on for since the last 6 months. Growth strategy for us is a very planned move. We have been speaking about following the Peshwa route outside Maharashtra, moving to Madhya Pradesh, Chhattisgarh, Jharkhand, Bihar, UP. And so for that we have been it's a where we'll be holding exhibitions there. So primarily we now will do exhibitions there, connecting to city-based consumers there, connecting to friends of brand, different organizations, and build up the brand in the state before we go. Also, these states have a very strong connection with Maharashtra, where people have moved here for employment, for education. So the brand awareness is healthy in those states as far as PNG is concerned. So it should not be very, very challenging. But for us, it's a well-planned move, and we are sure that we'll be able to achieve the same kind of brand penetration and loyalty which we have been able to demonstrate in the state of Maharashtra. Again, the legacy of almost 200 years is something which is definitely going to be a big USP when we enter into different areas. And our expertise of jewelry making, handcraft jewelry is something which will give us the edge when we go into newer markets.
Okay, sir. Thank you so much. That's all from my side.
Thank you. We have the next question on the line of Sanjay Setapati from Apposite Capital. Please go ahead.
Yes, sir. So just want to understand, your other expenses increased a lot this quarter. Is it because of the new stores that you opened?
So my other expense, which increased by almost 30 crore on quarter-on-quarter basis, these are basically the marketing spend that we have done, and at the same time there are some mark to margin which we have to pay because we have taken gold metal also, so we have to hedge that 100%. So for that also we have to consider in the mark to margin category. And other than this, there are a couple of discount scheme which we have launched during the Navratri and Diwali festival, because this being the festival wherein we have reached to a remarkable revenue of almost 1,000 crore in a single month. So all this considering, the impact is of that way.
So is there any those losses relating to those customs duty reduction in this quarter as well, or no?
No. There is no impact on Q3 as far as custom duty is concerned, because custom duty impact is happen in the H1 or Q2 of this financial year, and that has been fully recovered, because at the time when duty reduction happened, there is we also witnessed the increase in the sales post 22nd July 2024. So it is compensated with the inventory infusion. So we have also replenished the inventory at lower cost. So considering net off, there is hardly impact of 3 crore, which we have already taken hit in last H1 and Q2.
Understood. And so you have increased your number of stores quite significantly during Navratri time, and I understand that there is some amount of seasonality to your sales, right? That is, March quarter typically is lower than December quarter. But since you have increased the number of stores, do you think you will be able to match December quarter performance, March as well?
Typically in the jewelry industry, Q1 and Q3 are the quarters wherein the major festive seasons lie. So one is Gudi Padwa, Akshaya Tritiya, and Q3 where Diwali season lies. But having said that, again Q4 has that one day of the wedding season. Also this year, the Gudi Padwa is on March end, which is going to be in Q4 itself. And with the sustained consumer interest in gold as an investment, in gold as jewelry, and with the price outlook remaining bullish, we see a strong traction of consumers. The same store growth has been in double digits, and I think that the new stores also have taken off more than what was desired. So I think we are confident that we should be able to keep the momentum going, because the stores were rightly selected, they're in the right location, and each store has shown remarkable sales right from day one. So considering that, we do not see this as a challenge where it will have an impact on the numbers for Q4. But yes, Q3 definitely is a month which has the advantage of Diwali and Navratri.
So you are more or less going to probably complete your target of some 52 jewelry stores by end of this financial year, right, sir?
Yeah. So we have already added 2 stores in January. So right now we are at 50 stores, and in the month of March we'll be adding 3 more stores. So we'll be at 53 stores as of March end.
And then what kind of store addition are you planning for next financial year? Is that something which you are disclosing?
Yes, next financial year, the plan is that considering the company-owned stores and the franchisee stores, along with our the lifestyle format, what we have envisaged, the store with lighter weight jewelry, we would be adding 25 stores in the next calendar financial year, which will be a mix of franchise and company-owned stores.
Okay. So considering this kind of growth rate, do you think you will be able to maintain current EBITDA margin, because you will be constantly spending more on these new stores which have more than 12 months of break-even, right, sir?
So our strategy is very different. We are not expanding randomly in different states, but we'll be focusing on 2 particular states for next year, which will be we'll have majority of the stores here. Plus we'll be doing some more expansion in the state of Maharashtra. And like I mentioned, the lifestyle stores, lifestyle by PNG. So this is basically targeting a new generation, young stylish jewelry. So these stores typically need a very low capex. The stock investment would be in the range of 5 to 7 crores. So our internal accruals will be are strong, and we will not be looking at raising heavy debt to fund the expansion. It will be managed through our internal accruals, and around 10 stores would be out of this also would be franchisee, so which will not be draining our capital. So it's so to answer your question, will they have an impact on margins? No, because the 9 stores which started this year, the 3 stores starting before years, all these stores will also lead to maturity and stock cycle, stock turn of more than 1.5, 2. So that will aid us to be able to easily fund this new store expansion.
And if we can just ask one more question, that when you are saying that, because you have already spent almost entire IPO proceeds in your this thing, so you are saying that you will be able to fund your expansion through internal accrual going forward?
Because from the IPO proceeds, we have also repaid the entire bank debt. So if you have seen the IPO objective, 300 crore was to repay the term loan, the bank debt, and then the balance was primarily used for stock infusion. So as we speak on December end, we were almost debt free, just a 50 crore to 60 crore term loan. So we are in a very comfortable position as debt to equity ratio is concerned, and that would really help us along with our strong internal accruals, and the focus being only on investing back in stock. So this is how we have planned expansion in the coming year.
Thank you so much.
Thank you.
Thank you. We have the next question on the line of Anirudh Kepatre from Edelweiss AMC. Please go ahead.
Hi. Congratulations, Saurabh and Kiran, on a good set of results. couple of questions now. This 25 store additions which you're planning in F26, how many would be the COCO stores in this?
So the mix of 25 stores would be, P&G stores, which would be full-fledged stores, which would be in the range of having inventory of around 40 crores, and then there would be Lifestyle by P&G stores, which would be smaller format stores, 1,000 to 1,500 square feet, with a capex of 7 to 8 crores. So the plan for the year is that we'll be doing 8 COCO stores, 7 to 8 franchisee stores for P&G, the 40 crore model, and then around 10 lifestyle stores, which would be half COCO and half FOCO. Along with that, we also be expanding with a store or two in US. So the area identified are right now Seattle, where we'll be starting the store hopefully in Q1 of next year.
Okay, and what would be the typically the break-even for these lifestyle stores that you are expecting?
Lifestyle stores, are in the same line what we're looking at our stores, but lifestyle being lighter weight, we expect them to break even in 9 to 12 months. These are stores where it will be gold jewelry of 18 karat and a bit of 22 karat, but lighter in weight, designs which are not catering to P&G. And then there will be diamonds jewelry, which is 18 karat gold and diamond. Again, design which we don't keep in P&G. It may also have 14 karat gold. But the advantage of this is that the pricing here is little premium. So margins here would range in a range of 15 to 20%.
Okay, so would you how do you think this should help move your overall studded ratio then? So it was 7.4% in this particular quarter. What can you help me with what was this in on a QOQ as well as a YY basis, the studded ratio?
Lifestyle by P&G strategy is not to target studded. It's primarily to target the younger population, Gen Z, people who are looking at very stylish jewelry, a different shopping experience, high maybe mall presence. So that is where we're targeting Lifestyle by P&G. As far as the studded ratio is concerned, in Q2, late Q2, we launched our Polki and Jadao collection by the name of Polmi, which saw good traction during the month of Diwali, and that is what we are moving ahead with. So Polki as a category is something which will really help us to gain 2-3 basis point in the studded ratio category. Along with that, precious stones and color stone jewelry is another area of focus. So this, along with strong growth in the natural diamond category, is what will help us to reach to that target of around 12-13% studded in the next 2-3 years.
Okay. This last bit of question: what would be the SSG for this particular quarter? You've given 26% for 9 months. What was it for Q3?
Q3, on that.
Yeah, so talking about for so Q3 sales growth we have in terms of gold is 44%, wherein the value growth 44% and volume growth we have observed 14% year on year.
Okay, understood. Can you just lastly just briefly comment how is the environment at this point in time in terms of what is the customer behavior that you're seeing, given that gold prices have kind of moved up very sharply recently, or they continue to consistently move up? Are you seeing any reduction in footfalls? What is the customer behavior at this point in time?
Yeah, our customer footfall have seen a positive rise. As we mentioned in our presentation, my ATV is gone up to 86,000 rupees.
No, that's Q3. I'm saying for Q4, this ongoing quarter. I'm saying.
Ongoing quarter, Q4, we do not see a dip in footfall primarily due to pricing, because prices somewhere with the consumer are somewhere accepted too. So I do not see that will have a major impact in terms of footfall. We are seeing that the wedding season looks strong. Again, from 15th of March onwards, the festive Gudi Padwa vibes will start showing it there. The collection launches planned for Gudi Padwa, Akshaya Tritiya. So I think overall the Q4 also looks to be on a good sound footing. But to answer a question whether there's been a customer hold back due to high prices, that has not been a case. Because prices have shown increase. So people, the currency has changed. Some people would exchange old gold to make wedding jewelry. So that portion can see a higher rise. But people looking at encashing gold or selling gold, that phenomena has not kicked in. So we believe that the consumer sentiment remains strong.
Excellent. Congratulations once again and all the very best.
Thank you.
Thank you.
Thank you. We have the next question on the line of Abhishek Kumar from Sanctum Wealth. Please go ahead.
Hello, good afternoon. Congratulations on a good set of number. Most of my questions have been answered, so I just have one bit on the expansion strategy. So given that we are one of the biggest player in Maharashtra, where we have a rich history and knowledge and understanding of the local Maharashtra market, given that we have aspiration of moving to different state from here on, Madhya Pradesh, Jharkhand as the one which you mentioned. So, because given that there would be competitive activity from local and other pan-India players, so what kind of strategies you are thinking in order to deploy there so that you have a right to win in those markets, and other brand building activities which you plan to undertake in coming months when you actually launch the store? And also, would those stores be primarily COCO stores, or you would experiment with FOCO?
Good question, and so I answered part of before that the strategy would be in a very planned way. We have already done the market surveys in the areas which we are looking to expand. That is primarily looking at the market, comparing, mapping with competition, mapping with on the design front, mapping on the brand front. Post that, we'll be doing exhibitions in various cities which we are focusing for growth ahead. Along with the exhibitions, we do a lot of customer connect activities. We do a lot of branding activities. So the brand presence, the brand connection before we store launch is quite well established, and this really helps us to be able to start sales as soon as the store opens. Having said that, yes, definitely it's a different market, but we have seen that advantages which Central India, North India has to offer. It's a single language state. These states have a very strong connect with Maharashtra, and that really has helped to that the brand awareness, the brand familiarity, and brand evangelists are already there in those states. So we do not see it as a big challenge. We definitely would be able to continue with our same strategy as we go there in terms of pricing, and what we believe is the entire shopping experience which a customer feels at PNG, and the brand relationship which we have developed. That's a strength which also will be adequately used as we go in those states. Coupled with that, we'll be again positioning at the same level what we're positioning here. So we are a jeweler to the middle class, upper middle class, and and that's a big base of the pyramid. That is what we'll be also targeting in those states when we go ahead.
And store expansion initially would be COCO stores?
Yeah, so initially we would be doing the COCO stores there. But like I mentioned, we also be looking at franchisees where it's FOCO for franchise company operated. We already have a strong interest on that front, but the company would first do 3 to 4 COCO stores and only then undertake the FOCO model as we further progress in those states.
Okay. Got it. Thanks for answering the question. All the best.
Thank you.
Thank you. We have the next question from the line of Dinesh Kulkarni from Finsight. Please go ahead.
Hello, sir. Am I audible?
Hey, you are.
Yeah. Thank you, sir. Thanks for giving me the opportunity and really, great set of numbers. Sir, my question was just lines of what was asked here just now. So, are we saying that the growth in Maharashtra for PNG has more or less, we've captured or penetrated most of Maharashtra? That is why we are looking out at other states, or is that the competition in Maharashtra is such that that we are not seeing the same kind of growth which we saw in the past? Can you just elaborate on that?
During our IPO presentation, we had said that Maharashtra, we would be looking at around 50 to 55 stores, and post that we would be expanding in the neighboring states, and that is the same thing what we are right now saying. We at 53 stores in Maharashtra. We feel that the state is quite well covered by us. Growth definitely will happen in the state, and the existing stores will keep on performing. Maharashtra is a growing state, and definitely there's potential for the state. But in terms of locations, we feel we are quite well covered. There are a few more locations which today may not be sunrise, but which are looking emerging in the coming years. So we'd also keep an eye on Maharashtra, and any opportunity any city we feel there's opportunity, we would definitely look at that. But having said that, we need to further expand the brand, and that is where we're looking in the neighboring states. But our SSG in Maharashtra has been strong and will continue to be strong.
Yeah, sir. That is the concern, So, what we know today, Maharashtra is obviously a growing state, and it is the largest contributor to the GDP, right? But if you compare Maharashtra with other states, even the per capita consumption and expenditure would not be as high as Maharashtra, right? So, would not that impact the SSG growth? However, we look at those aspects of
maximum number of so the maximum number of hallmark jewelers are in the state of Maharashtra. When you look at the entire belt of Central India and say North India, the number of jewelers compared to the population, the state size is very attractive for opportunity to expand further there. And again, those Maharashtra is an established state. Is a state wherein there's already development happened, and it will happen further. But India as a growing, and that is where we see a lot of new states where new opportunities, and we want to be a part of that. Those new opportunities also. But our focus on Maharashtra will remain strong, and we would seize every opportunity we have in this state here.
Okay, so that sounds great. And so eventually, can we expect the kind of margins we are doing in Maharashtra, those similar will be reflected in our company's performance in other states as well? We are on the same line, right? Or are they at a lower end? We can how is that going to impact the margins? Say 3 years from now.
Long run, the pricing in Maharashtra and other states is almost the same for jewelry. There isn't any much difference. So I think on margin front, we would be looking at positive improvement, because as the studded ratio goes further up, we will be seeing a benefit from that. And also, since we are now fully hedged, price fluctuations and price movement will not affect our margins. So going ahead, we should see better margins as the studded ratio starts going further and further.
Okay, so that sounds really encouraging. Just the last point from my answer. So we said that we are going to introduce this lifestyle by PNG. That's a great initiative. Just wanted to understand, where does that stand with comparison with say N Gadgil, right? I mean, are they in the same lines or the different sort of business models?
A fashion jewelry brand. It is not, and lifestyle by PNG is a fine jewelry brand. So it will be dealing in gold and diamonds only. It is not fashion jewelry or not silver jewelry. So this is primarily complementing our existing PNG gold and diamond sales, but targeting a new TG, targeting a younger TG, and being able to offer designs which are highly differentiated than what we have in our existing stores, with better margins than existing stores. So the ATVs there would be lower than what we have in the stores here. It will be more of fun jewelry. It will be more of casual shopping, more of impulse buying, as compared to PNG, where it's a planned buying and a serious shopping.
Okay, that sounds really great, sir. And thank you very much. All the best.
Thank you. We have the next question on the line of Vikas Reddy from Lakshmi Kala Investments. Please go ahead.
Good evening, sir. Congratulations on a good set of numbers. Sir, after the recent spike in gold prices, have you noticed an increase in demand for 18 karat gold as compared to 22 karat?
I think there's been a slight introduction of 18 karat in all our stores. So it's right now more of a pilot project than a serious project. We're trying to look at people's preferences. So 18 karat is being slowly introduced more in chains and in finger rings categories. But serious shopping is still happening in 22 karat. And people are looking at enhancing their new designs by exchanging old gold. But I think wedding shopping primarily is still 22 karat driven, while lightweight shopping, gifting can move to 18 karat. But it's too early to say that there's a short shift in that direction.
Yeah, and I just wanted to know that what's the difference between retail and non-retail side of business. So what is the non-retail side of business, sir?
So retail means the sale which we are happening across the counters of all our 48 stores, and non-retail means these are the stores which we are doing through franchisee partner through e-commerce.
And as we had discussed in last con call, we are trying to reduce the non-retail side, which is bullion sales, right? So and we are more focusing on retail stores only, right?
Right, correct. So as we promised, we have totally stopped that retail, refine on retail, which is across my 48 stores and franchisee and e-commerce.
Okay, got it. My last question is, sir, hearing a lot of buzz in lab-grown diamonds, most of our peers are building their own stores in lab-grown diamonds. Are we planning to open our own store selling lab-grown diamonds?
At PNG, there's been no demand from consumer asking for lab-grown diamonds. And the reason for that has been that we have been, most of the jewelry chains, diamond jewelry sales are in the size of -11, so 11 cents and minus. Lab-grown diamond have only taken off in the bigger sizes, so 30 cent, 40 cent plus. So it has not had any impact on our sale or on demand for natural diamonds. So we have no plans under PNG to introduce lab-grown diamond. But like you said, that if it's a trend which catches on, are we equipped? Yes, we are equipped, and maybe at a time, Lifestyle by PNG can venture into lab-grown diamonds if the situation is favorable for lab-grown diamonds.
Thank you so much, sir, and all the best.
Thank you.
Thank you. We have the next question from the line of Bishmit Nayak from RW Advisors. Please go ahead.
Thank you. Sir, first question would be what sort of inventory gain would we have booked in this quarter and the base quarter?
Almost 2.5 crore.
So 2.5 crore in this quarter?
Q3.
Okay, and in Q3 FY24?
By 24, since we are not using the hedging tool, that time we are not listed, so that freedom which we have, we are bullish on the gold segment. But after IPO, as we committed that we are increasing the hedging proportion, that we have done it, and so this is affecting in Q3. And as on date of January, my entire business is 20%.
Okay, and one more question, sir, on other expenses. Since we added a lot of stores in starting of Q3, right? So should we expect this run rate to continue or come down a bit?
As far as my new stores are open, we have a set of system or the procedure or policies as far as new store opening is concerned. So we have tight control on my all expenditure with respect to new store which we are opening. And at the same time, we have SOP for new store to monitor the expenses as well. So we observe based on the historical data the same thing that typically 1.5 years. So 18 months is required to come to a particular store as a break-even. But when we open 9 stores in 9 days in Navratri this financial year, as on date they are self-sufficient to ensure that there is no cash infusion required to particular store to run. They are self-sufficient. So hopefully in less than 1 year, these 9 stores also can come to a break-even and contribute in my total net profit.
No, sir. So my question was on the blended console level other expenses. Should the run rate continue or would it go up a bit?
Sir, we are definitely, the moment sales figure will increase, the revenue increase, then my operating expenses and other things will be totally under control, because these are more or less fixed on account of rental, on account of manpower cost, on account of other expenses. These are also centrally managed, like all AMCs are done under centrally agency of admin. So things are under control. The moment revenue increases at particular store, then I think these costs will be under control.
Understood. Thank you.
Do you have further question, Mr. Biswat?
No. I'm good. Thanks.
Thank you. We have the next question on the line of Lakshmi Narayan from Tunga Investments. Please go ahead.
Yeah, thank you. I just want to understand what has been the volume growth on the old stores. For example, the stores that were that we had as on end of FY24. On the 9 months, what has been the grammage growth for those stores?
So you're talking on the volume growth, right?
Yeah, on the volume growth of your stores, I think we had almost 40 stores, right? As on, as on FY24, the number of stores we had in March 31, 2024. I just want to understand what has been the grammage or volume growth for those stores in the last 9 months.
So talking about YTD growth of same store sales growth, that time, see, total we have 48 stores, but if I have to give you the figure for same store sales growth, then I have to consider only 22 stores, because these are the stores which are available last year as on December and as comparable with respect to Q3 of financial year 25. Considering only these 22 stores, then my total growth in terms of value is 27%, and in terms of volume it is 5%, only in talking about gold. At company level, considering the overall growth, my volume is increased by 13% and value is increased by 40%.
Got it. And what is the mix of trade-in jewelry and scheme-based jewelry and outside this and coins?
You're talking about the bullion part of it?
No, there is. I mean, some of the gold will be recycled in a sense that somebody brings it and then recycle. And then second will be scheme-led ones where you already have subscriptions and the monthly one. And then third would be outside this. So I just want to understand what is the broad mix of this across for the last 9 months.
See, our old gold with people exchange for new jewelry would be in the range around 25 to 28%. Our scheme, wherein people have, what we call as the future purchase plan, that would be in the range of around 8 to 10%. And the balance is primarily on the spot fresh purchase.
Yeah, got it. And the new stores which you actually opened, especially the one during Navratri, what has been the kind of a run rate per month of sales of these new stores which got opened? Roughly, maybe per quarter, what kind of revenue these new stores are generating?
So now we have opened 9 stores in 9 days, and the performance of these 9 stores is that in Q3 they have contributed 240 crore in the top line. So as per our plan, the break even is that once we reach 1,010 crore, then I think all my 9 stores will be. So we are at present at 24% of the new store. In 3 months.
Got it. This is very helpful. Thank you so much. Thank you.
Thank you. We have the next question on the line of Naveen from Motilal Oswal. Please go ahead.
Just a couple of questions from my side. One, by the end of December, what was our inventory and GML?
I'm very Naveen.
Closing inventory on December is 1,800 crore, and my GML is almost 558 kg.
Okay. And when you said by the end of December your hedging ratio was 83%, so how that ratio actually derived?
Actually, the thing is, when we are saying that whatever may be the price gain upward and downward, so we are considering what is my sale. So typically hedging policy, as we have observed all the peers, whatever they are forecasting for next financial year, that much amount we are continuously hedging. If you're talking about total inventory which is lying in the company, then we are almost 75%, because 30% by way of old gold which is continuously exchanging across the counter, 30 to 35% by way of GML, and we have 10 to 11% by way of derivatives. So considering total inventory, we are in the range of 60 to 70. With respect to the effect on the profitability, we are fully hedged.
Sure. And how much was our ad spend during the quarter? I'm sure that since a lot of stores have opened in the quarter 3, the ad spends would have been quite lumpy compared to the normal which we do it for other quarters. So how much was the ad spend this quarter?
Expense pertaining to?
How much advertising expense which we had done in quarter 3?
Naveen, I'm not getting your question.
Kiran, I was saying that in quarter 3, how much we had spent over the advertisement which we had done for new stores.
Okay. Just so.
So Naveen, Kiran will give the numbers to you. What our total spend would be would be around 1% of our entire turnover. So we are well in budget. This year we should be closing at around 7,500 to 8,000 crores. So marketing spend for the year would range in the range of 55 to 60 crores, including all the new store launches.
Yeah, sure. And just last question from my side, when you talked about the lifestyle stores, any specific location which you had identified? I'm sure that this would have been largely in Maharashtra only.
You're talking of Maharashtra. I didn't understand your question.
I'm saying which all markets in Maharashtra you are looking for these stores?
See, Maharashtra, we had the next 3 stores which we have planned in Maharashtra. Primarily, one is in Pimpri in Chinchwad area, on the outskirts of Pune near Chafekar Chowk. One store is going to be another one, the flagship store here on Lakshmi Road, very very close to our existing store. And the third one is going to be in a place called Talegaon, which is on the Bombay-Pune highway. Along with these three stores, next year we also have the other in Mumbai, which is again a flagship store planned, hopefully in Q1 of next year. And post that we also have places like Jalgaon in Maharashtra, which again we are catering to. So there's a mix of Maharashtra and outside Maharashtra. In terms of expansion outside Maharashtra, as we had said, UP, Bihar, and Madhya Pradesh are the states where expansion will commence in the next financial year.
Yeah, thank you so much, Saurabh. I will be in the queue. Thanks.
Thank you.
Thank you. We have the next question from the line of Devanshu from MK Global. Please go ahead.
Yes, hi, Saurabh. Congratulations on a very good performance in both Q3 and 9 months. Saurabh, my question is broader and not specific only to you. I wanted to better understand this decline in gold grammage per store, right? So obviously this is happening due to significant increase in gold price. But as an owner, does this concern you, and what steps are we sort of taking to improve this going ahead?
Decreasing grammage is not something which is that alarming, because what is happening is one side is that decrease is our average grammage, which was say around 12 to 13 grams of jewelry, maybe even 14 grams, would have gone down by a gram. But the number of footfall which we are seeing, the new addition that we are seeing is far more than that. Per capita income spending is rising. So that is offsetting this entire decrease in maybe your ATVs. But having said that, also the interest towards studded is something which is helping PNG again to gain better margins. So as prices go increasing, people's budget is going to somewhere not be able to match that hike. So we will definitely see a little dip in your ticket size, but this will be compensated by the rise in number of customers, and our focus to further increasing our revenue and our conversion is something which will definitely be of use to us. So this is not a concern, and it is already well addressed by our company.
Sort of from an inventory perspective, I wanted to understand, this is like, say, 4 or 5 years ago at your stores and now. In terms of kg, are you also seeing some optimization happening? So because gold price has increased, consumers are sort of purchasing lower grammage. So have you been able to reduce the grammage at your stores over, say, last 4 or 5 years? So what's your strategy there?
This is a strategy actually we adopted during COVID. So post-COVID was the time when we decided to work on leaner inventory levels. So this was the year 2021-22 when we got down the inventory levels by around 25-30% across all the stores, and we compensated this drop by looking at made-to-order business. So that has been a strategy which has really successfully worked for us. So inventory level which today our competition would be having, say, a 55-60 crore, we work at a 40 crore. And that helps us to again get better stock turns, to get better revenue per square feet and revenue per store. So this is something which we have been constantly working on. But it's not only because of high prices. This is something which we had thought even before that. And that really has paid off in the last 4 or 5 years.
That's really encouraging to hear. Saurabh, I just wanted to understand from a price increase perspective. So I wanted to understand, so suppose a necklace was, say, 30 gram earlier. So have we been able to reduce it to, say, 27 gram because there was some 8-10% decrease in grammage purchased by consumers, right? So I just wanted to check your thoughts there on that perspective.
Which is happening. So like bangles, which were like, say, initially like 10 years ago 50 grams, have today come to 40 or even like maybe 37, 38 grams. So we are definitely working on trying to make the same design in lighter weight. That's an ongoing process, and that is something which has really been the flavor of the season as prices go up and budgets don't match the same rise.
Very helpful, Saurabh. Thanks for taking my questions.
Thank you. We have the next question on the line of Nitin Jain from Fairview Investment. Please go ahead.
Yeah, apologies if my question has been answered already. So I just wanted to know how Q4 has panned out so far, given the unprecedented rise in gold prices. Thank you.
I didn't get a question. Can you please repeat?
Yeah, can you hear me now?
Yeah.
Yeah, so I joined a little late, so apologies if the question has been answered already. I just wanted to know how Q4 has panned out so far, given that, gold prices have gone up unprecedented.
The Q4, is a month when we see, sales on a steady level, primarily backed by wedding shopping. Month of February is again gifting, anniversary, the season of love. And then March is Gudi Padwa, so that starts by mid-March. The shopping for Gudi Padwa will start. So overall, the quarter has been decent. Though prices have gone up, the consumer interest still remains. Old gold exchange has gone up. But even in this quarter, at the record price, so the sentiment remains strong. People interest and commitment to gold and jewelry remains strong. So I think as of now, things are on track, and it's been a good quarter.
Thank you, and congratulations on the